first trades are in. The Nifty is up 100 points.
Currently, as we speak, we're trading below the 17,000 mark and hovering precariously close to our 200-day moving average of 16,992. As we speak, the Nifty is above 17,100.
The Bank Nifty is now down 266 points. The currency has taken a bit of a turn for the worse, and a lot of individual names have seen some bit of price damage. Though I must say that today, at least, the broader market has managed to hold out much better. You know, the market's closing at a very interesting point. The last few minutes, by the way, very sharp recovery in the Bank Nifty.
Hello and welcome to CNBC TV18. You're watching Markets Today, the show where we track about 6 hours of the day's trading action in just 5 headlines. I'm Ekta Batra, and here are the top stories for this evening. It's a day of heavy volatility on the Dalal Street. Indices end with modest gains after alternating between positive and negative territory through the day. Traders watch for fresh triggers from the Reserve Bank of India and the US Fed Reserve. The Kirit Parikh panel seeks more time to review the price of natural gas. The prices were due for revision on the 1st of October. Kirit Parikh tells CNBC TV18, we cannot do justice to the issue in 2 weeks since the committee was formed. That's a CNBC TV18 exclusive. Power Grid shares rally after the government rejects REC's proposal to sell PFC stake to Power Grid. Shares of REC sulk in trade. While the credit card data sees a dip in spends in August, SBI Card pulls off a strong show, clawing back market share of spends for the first time in 5 months. The stock gains. For you this evening, it's a packed show today. In Market Opinion, we have Gautam Shah, founder of Goldilocks Premium Research, Nilesh Shah, MD and CEO Envision Capital, joining in to give us their perspective. Well, let's start with the day's market action then. The Sensex and the Nifty gave up what were intraday gains to end marginally in the red. So it was a volatile day of trade with financial stocks dragging the markets. The Nifty Bank Index lost over 250 points. Mid-caps managed to buck the trend with the index ending with marginal gains. Anuj Singhal is here with a market wrap on what took place today.
Well, just the kind of the day where both bulls and bears would take something away. The market is near a very important support mark. All the rallies today got sold into. The first rally, which was maybe an obvious trade, but the post-noon rally also got sold into. But while every rally was getting sold into, every time the Nifty was coming close to 200-day moving average, it was taking support. So that really is your Lakshman Rekha now. The Bank Nifty underperformed once again. 4th day in a row that it's happened. Though the broader market did show some stability. As I said, the banks were down, so ICICI, Kotak, SBI and the HDFC twins dragged the market, and there were some others like Hero MotoCorp, Titan and Tata Steel. On the gaining side, you had some stocks like Cipla, Tata Consumer, Shree Cement, though they don't make up for much of the index, and IT did well, especially in the last 1 hour or so. Names like TCS and Infosys did bounce back. Outside the index, the big sector to watch was city gas distribution. And of course, big names like Gujarat Gas, IGL, MGL were all higher. The setup is clear, but the Nifty must defend the 200-day moving average or this zone. Otherwise, the bears might just start to press home their advantage.
Okay, thanks Anuj for that. Let's get in some market opinion then. Gautam Shah, founder and chief strategist at Goldilocks Premium Research, said that we are seeing a short-term downtrend in the Indian market, but in the relative sense, India will be an outperformer. He added that the current market correction is a good time to buy cement stocks.
So many markets in the world have made new lows for the year, which is obviously not a good place to be in. And India pretty much was the apple of the eye for most market participants. But about time we corrected in sync with the rest of the world. And that's exactly what has happened in the last 1 week. So I think we are in a short-term downtrend, no doubt about it. The global equity market trend is not good. There's so much happening in the currency market, in the commodity market. And I don't think this is a plain vanilla correction. While you could see some pullbacks from time to time, but I still feel on a relative basis, India will be an outperformer and it will continue to stand out. Just a couple of weeks back, we actually covered 2 cement stock ideas, both linked to the Adani Group, ACC and Ambuja. And I think, they have a good future from a medium-term to long-term perspective, purely from a charts perspective. I think we like the way it's setting up. This market correction is a good opportunity to top up in them. So yes, go ahead and look to initiate longs in both these spaces. And even as a basket, I mean, look at what India Cements has done, JK Lakshmi. I think some of these structures are very good for the medium term. The problem is the market is not supporting right now. The moment the market supports, I'm sure cement will come back well.
Okay, so that's Gautam Shah. But meanwhile, Nilesh Shah, MD and CEO at Envision Capital, is betting on IT stocks. He said that valuations have become more reasonable for IT companies and that it is a good time to start accumulating IT stocks. He also expects India to be an outperformer.
The valuations, the P multiples have become a lot more reasonable. And our view is essentially that don't expect the margins to further deteriorate from the current levels. The demand environment still is pretty much intact. We've not heard of any IT companies talking of any slowdown in terms of demand, even if we reflect back to the past crises which markets like the United States or Europe faced. Even in that kind of an environment, the demand for Indian IT services companies was pretty much non-discretionary. So to that extent, we now see an environment where the demand is intact. The margins perhaps have moderated or have bottomed out, I'd say, and valuations have become a lot more reasonable. So from here onwards, we don't expect the IT sector to be an underperformer. I think it's a good time to start accumulating a lot of high quality, growth-oriented IT stocks. I still expect India to be an outperformer in context of what's happening globally. Just look at some of the growth estimates. The fact that GDP growth is still expected to be 6 to 7%. Inflation is going to be still subpar what we are seeing in developed markets, and at about 6 to 7%. We're still talking of nominal GDP growth of about 12 to 13%. And with margins now expected to improve because of the way commodity prices have fallen or the raw material and input prices have fallen, expect margins to probably kind of hold up or even get better over the next 2 to 3 quarters. So overall, the way we look at India is that we see a nominal GDP growth of about 12 to 13% and maybe an earnings growth which is in probably the high teens.
Okay, so that is some optimism coming in on the IT space. But what about the Indian currency? That too made a marginal recovery against the US dollar. On Monday, the rupee, remember, had weakened to record lows, and today's recovery is in line with what we've seen with most major currencies. The 10-year bond yield also softened in trade. Lata Venkatesh is here with the money market wrap.
Well, there clearly is some kind of an exhaustion or a peaking off of the dollar rally. It's, I mean, either flat or inches below its 114.5 that it had touched. It's like more closer to 14.05. This is also because a lot of central banks have intervened. First, the BOJ intervened, the PBOC has been intervening. So there is a sense of, enough, it has run enough, and there is a bit of a peaking off, maybe temporarily. So today we've seen many of the Asian currencies, or at least a handful of the Asian currencies recovering. The Indian rupee has recovered, so has the Thai baht, so has the Korean won. But we must be aware that there can still be a potential of reverses. The Chinese yuan has still been depreciating, and since we export a lot to that country and import even more from there, if the yuan depreciates, the deficit increases with China. So we have to keep an eye. The RBI may actually prefer a gentle depreciation like the yuan. But for the moment, the point is that Asian currencies or the world of currencies itself, currency markets, is catching its breath. And there have been no sharp moves after that over the weekend move in the pound. The bond markets as well in India are showing a decent recovery. Already yesterday we saw the 10-year spot yield recover a bit towards close because people had gone seriously short and they were covering shorts. Today we are seeing, the OIS, the overnight index swap market, which is a very, very liquid market, which reflects the mood of the market. Also seeing yields either peaking off, staying flat like yesterday, or falling off. Now, why are they flat? Because already the 1 month OIS is factoring in a 50 basis hike by the Reserve Bank. Now, how much more is there for that yield to rise? Likewise, the 1 year OIS already yesterday was reflecting 6.9. I mean, that means the peak repo rate, the Reserve Bank should be raising it all the way to 6.75 or 7. That looks a little unlikely at this juncture. So there was a bit of an overshoot. And today we have seen all those yields also inching down by a couple of basis points. We will have to wait and see because the US yields are still in an upping mode. From 3.79, they moved to 3.82 overnight. So there is still an upward pressure, but at the moment, the Indian yields seem to think enough is enough.
Okay, all right, Lata, thanks very much for that. So maybe some amount of stabilization in the money markets. Finance Minister Nirmala Sitharaman, in fact, believes the Indian currency is holding well against the dollar. Speaking exclusively on CNN News 18's town hall, she said India is much better placed than many other countries whose currencies have plummeted very sharply against the dollar. Meanwhile, Economic Affairs Secretary Ajay Seth says India's forex reserves are also fairly sufficient at this time. Also adding that
exchange rate. The government doesn't believe in it. Indian rupee and its exchange rates, the rate is also left to the markets to decide how it's going to float or get fixated at some level. So RBI's intervention is more to avoid the fluctuation.
It is not a concern, and is the view which you are expressing is overblown. Because if you recall that about 2 years back, when the reserves were of the same order, even then the discourse coming out in media, etc., and even by even other informed persons was that we have adequate reserves when they were 2 years back. Now, yes, there has been a depletion because of the inflows have come down, and at the same time the trade deficit at a higher level. But I don't see as a concern. India has a fairly large reserves.
All right, let's get to the second story now. On to a CNBC-TV18 exclusive. The Kirit Parikh panel has sought more time to review the pricing formula for domestic natural gas. In fact, Kirit Parikh has told CNBC-TV18 that the panel cannot do justice to the issue in 2 weeks since the committee was formed. They had been given time till September end to submit their report. Parikshit Luthra gets us more.
Well, early in September, the government had appointed the Kirit Parikh panel to look into the gas pricing formula, and they were tasked to come up with a fair price for the end consumer. So the committee has been meeting, and it has representatives from different gas companies. And we spoke to Kirit Parikh some time back, and he said that we've not been able to do justice to the gas pricing formula, to the review that we started 2 weeks ago. We need more time. This is an issue that affects a very large number of consumers, a large number of industries as well. So they will need more time to deliberate on this. So they've sought more time from the government. So this is what Kirit Parikh said. The APM prices are set for revision from the 1st of October onwards. We've reached out to the Ministry of Petroleum also for a comment on this. They are yet to respond. But the Kirit Parikh panel clearly saying they need more time to review this formula.
Okay, all right, Parikshit, thanks very much for that. Well, let's get to the third headline this evening then. Power Grid was up by 2%. This is after the government rejected a proposal for it to acquire PFC's stake in REC. Analysts view this move as a big overhang, in fact, being lifted. Vivek Iyer, who's been tracking this story, joins in with the details on this. Vivek.
Well, the stock in focus was Power Grid. Remember, on the back of multiple news reports that indicated that the Power Ministry may ask Power Grid to buy PFC's stake in REC. The stock has seen significant price erosion over the past couple of trading sessions. What had essentially happened was that brokerages had taken note of the fact that if this particular development did indeed come to fruition, there would be a significant impact in terms of the valuation multiples that the stock trades at. There were concerns about capital allocation policies and a lot of concerns, especially regarding the dividend yield of Power Grid. You know, the Power Grid used to give a dividend yield of around 6%. There were worries that it would fall down to 4%. However, in a CNBC-TV18 News exclusive, the Power Minister and the Power Ministry actually gave a clarification saying that that particular proposal was completely off the table. In fact, they mentioned that Power Grid will not be asked to buy PFC's stake in REC, and this led to a significant removal of overhang as far as the stock of Power Grid is concerned. In fact, brokerage house Citi also came up with a note saying that the development, in fact, means that the clarification removes a major stock overhang on Power Grid. Citi went on to add that they maintain their buy stance on Power Grid due to its safe and stable business model, and they say that the company continues to enjoy high return on equity, along with the fact that the company has extremely high market share in the transmission space in India.
Okay, all right, Vivek. Thanks very much for that. Well, meanwhile, Power Minister R.K. Singh told Abhimanyu Sharma that the decision is final and Power Grid does not have the expertise in the field of financing.
We are joined by the Union Power Minister, Mr. R.K. Singh. Sir, thanks for speaking with CNBC-TV18. What have been the reasons behind not going ahead with the sale of PFC's stake in REC to Power Grid Corporation?
We examined the whole issue. Basically, we find that the Power Grid is engaged in an entirely different business altogether, and they will have a controlling stake in a company which is engaged in the business of financing, about which Power Grid does not have any expertise whatsoever. So we thought about this matter, and we felt that perhaps this needs reconsideration. We've decided that we shall not go ahead with it.
So are you open to considering this proposal again? What are the challenges which you are possibly going to address in a fresh stakeholder consultation?
We are not open to considering this proposal again at all. I mean, we are very clear in our mind that we have decided against it, and that decision is final.
Okay, important clarification there. Time for a break now, but stay tuned. We'll be back in a jiffy with all of the other top stories we're tracking. Welcome back. You're still with us on Markets Today. Let's get to the rest of the headlines that we're tracking for you. Well, on to the fourth headline today. SBI Card rallied 3% after the company's August performance, which was a strong show barring a dip in the credit card spends. Abhishek Kothari is here with the details.
For the month of August, RBI's credit card data do suggest that SBI Card's performance is better than the industry average. So total cards have grown by 2% on a month-on-month basis, while, for the sector, we have seen a decline of 2.8% month-on-month. Total spends have increased by 1.24% month-on-month, while for the industry as a whole, it has declined by 3% month-on-month. However, average spends have declined by 0.8% month-on-month, which compares to a decline of close to 0.2% for the industry as a whole. So in terms of card issuance, they have gained market share for the first time in last 3 months. And in terms of, market share in spends, they have seen a first time market increase in last 5 months. In spends, their market share is now at 17.43%. This compared to 16.7% that they had in the previous month. So overall, good data coming in for SBI Cards, and the festive season ahead is giving the stock, a cheer in trade today.
Okay, all right, Abhishek. Thanks very much for that. Well, on to the fifth headline today. Then Nazara Technologies fell close to 3% after the Tamil Nadu government approved an ordinance to ban online gambling in the state. What does this mean for the company? Vaishda Unwala is here with the details.
Well, the Tamil Nadu cabinet has approved the ordinance to ban online gambling. Now, the reason behind doing this is that the Tamil Nadu government says that teenagers and adults were losing their entire earnings and savings in these online betting games. Now, for example, though Rummy might be a game of skill, the game using stakes will become a gambling. Nazara Technologies and many other industries at present are looking at increasing their presence in the online gaming space, which at present is at a very nascent stage in India. We also know that India's online gaming industry has been under the scanner since quite some time and undergoes frequent changes in regulations, in taxations, and likewise the GST. Now, many of these bans were challenged by skill gaming startups and industry associations in their respective state courts, which overturned these suspensions. The Supreme Court had also upheld the fantasy sports as a game of skill in July 2021, which is last year. States like Telangana, Andhra Pradesh, Kerala, Karnataka have sought to prohibit the game of skills.
Okay, all right, Vaishda. Thanks very much for that. Let's move on then. Mahindra Logistics gained over 0.5%. This is after the company bought Rivigo's B2B express business for around 225 crores. Manglam Malu is here with the details. Manglam.
They've gone ahead and made an acquisition. Rivigo's B2B business is what they've bought for about 225 crores. Remember, Rivigo is the company that pioneered the relay logistics service. They had two arms, that was full truckload logistics as well as B2B, and in that Mahindra has gone ahead and bought the B2B vertical. The B2B business in FY22 did revenues of around 371 crores. Of course, much higher than what we saw in FY21, but lower than what we saw in FY20. FY20 was an exceptional year for online commerce as well because of the pandemic. But importantly, Mahindra Logistics' own revenues in last year were over 4,000 crores, and in the first quarter itself was around 1,200 odd crores. So this incrementally adds about no more than 8 to 9% to their overall revenue. The bigger trigger, however, here will be the kind of leveraging that these guys can do with Rivigo's network of 250 plus processing centers, 1,000,15 square feet of land, or the warehousing area that Rivigo has. So even if they go ahead and do about 6 to 7% margins on this 371 crore revenue that Rivigo has done, it would be accretive for their return on cash, because it would mean about 10% on the 225 crores that they are deploying. The question, however, is how much can they scale up this business with their existing ecosystem.
Okay, all right, Manglam. Thanks very much for that. Staying with a couple of more stocks in focus, Route Mobile gained 2%. This is after the company has upped its guidance and told CNBC-TV18 that they were confident of 50% revenue growth in FY23. Reema Tendulkar is here with the details.
So the biggest takeaway from the Route Mobile interview today is that the company has upped its full-year revenue guidance. The company said they're confident of a 50% revenue growth, but they're likely to do a 60% revenue growth. This is better than what they had earlier guided, which was about a 40 to 50% top-line growth. Secondly, the management also said that this quarter is likely to see record revenue. That's how strong things have been, and H2 is typically stronger for the company, given the festive season in demand, and markets like LATAM typically do well in the December quarter. FY23 volumes will at least be 100 billion transactions. They will do tuck-in acquisitions, no big ones, which will boost their revenues, but tuck-in acquisitions over the next 12 to 18 months. We also quizzed them about their UK exposure and whether the pound appreciation negatively impacts Route Mobile. So here the company clarified a negligible percentage of their revenues gets booked in pound, which means the recent pound crash does not negatively impact the company. In fact, their balance sheet will do better because they have some capital commitments in UK, which when translated into the rupee will actually, provide a boost to the company's balance sheet.
Okay, all right, Reema, thanks very much for that. So that is on Route Mobile, but there was a deal which was announced post-markets, which was Torrent Pharma, which is set to buy a dermatology company, Curatio Healthcare, for a sum of around 2,000 crores. Remember, it is a domestic-focused company. They will be coming with a cash consideration of around 115 crores on their books. So the enterprise value of this entire acquisition would be around 1,885 crores. Well, just to put it into perspective, this particular company is very strong in the cosmetic dermatology space. They have 50 plus brands in India, and they get around 75% of their sales from their top 10 brands. Now, this would make Torrent enter into becoming one of the top 10 players in the dermatology segment in India. Key brands include the likes of Teddy Bar, which is in the baby space, again Spoo, which is a baby shampoo, as well as Before Nappy, which is also a baby cream. So there's a lot of focus within that segment, and those are a couple of key brands of the company. Separately, just want to point out that the company Torrent Pharma will be taking on around 600 market reps as well as 900 stockists, which will come with the deal. FY22 revenue was 224 crores. However, they have shown growth of around 25% in August, or up to August already, and they expected to cross around 275 crores in terms of sales in FY23. So overall, they've paid around 7 times revenue in terms of this particular deal, a little bit on the more expensive side according to analysts, but nonetheless, it does bring on a lot of strong brands into Torrent's portfolio. Well, with that, it's a wrap on this edition of Markets Today. Thank you very much for watching.